All right. Good morning, everybody. Good morning, all you magnificent melonheads of the world, and happy Wednesday, everybody. Today is October 2nd, 2024. We got another busy morning going on, a lot happening in the world. The biggest story in the world is probably World War III. You think that ranks pretty high up there? I'm going to say, yeah, that's probably pretty big. All right, it's not quite World War III yet. It's not quite dogs and cats living together, but we saw another escalation yesterday, and we're probably going to see another one today or pretty soon. Now, this time yesterday morning, we were talking about how the oil market doesn't seem to care, about how we've had almost a year of nonstop, relentless violence in the Middle East, and the oil market just was not moving in response to it, almost like the demand side of the equation was totally in control and just nobody cared about the prospects for supply disruptions. And then it's like as if the world was listening and are like, okay, Jack finally said a thing. Now let's go do the opposite, because oil almost instantly started moving north at the opening bell yesterday, like to a second, 9:30 hits. It's almost like somebody knew something we didn't and started buying up oil at the opening bell yesterday, because the price of oil rallied almost $2 a barrel yesterday. So what happened? The Iranians finally retaliated against the Israelis for the assassination of Hassan Nasrallah, the head of Hezbollah. Good riddance. All right. The Iranians launched 200 ballistic missiles, drones, other things, along with rockets from southern Lebanon into Israel yesterday. Many were intercepted. The United States Navy participated in the interception of that. That's something that didn't quite get a lot of coverage, that our planes and our ships were shooting down missiles yesterday. Now, the attack is largely being written off in Western media as ineffective. And I got to be honest with you guys, what I saw yesterday, the video that I saw, did not suggest ineffective. I saw a lot of missiles making it to the ground yesterday. I mean, most of them seem to be making it to the ground. I didn't see many Iron Dome interceptors being fired off. I really didn't. And so, it's hard to separate the facts from the propaganda. And look, propaganda happens on both sides. Both do it. That the one side is saying we cut the head off the great snake, death to the infidel, all that other stuff. And then the other guys are saying like, oh, they blew up 4 chickens in a field in the middle of nowhere. Somewhere in between these two ridiculous statements is what really happened. I saw a lot of missiles hitting the ground. I didn't see many interceptors rising to meet them. So it looks like this saturation attack was successful in overwhelming the Israeli Iron Dome. And based on the rhetoric coming from the Israelis right now, which is much more terse than what we saw back in April, the last time the Iranians launched a few hundred missiles at Israel, the rhetoric is a lot tougher now. The Israelis are saying Iran made a mistake, that we're going to counterattack. Now, it's the counterattack that everybody is worried about, and that's why oil is up again this morning. Oil's up another $1 and change here. What will the Israelis hit? The Israelis are saying we're going to hit Iran. All right, there's several targets. They could hit Iran's missile facilities. They could hit Iran's air defenses, or they could hit Iran's nuclear program, or they could hit Iran's energy infrastructure. Now, those last two, if they hit the nuclear program, if they hit the energy infrastructure, the Iranians have said we'll retaliate for that. So tit for tat, tat for tit, back and forth, round we go. The question is, if they hit the energy infrastructure, that's what I think the oil market is worried about. All right, because right now the Iranians have all the data that they need from their experience in the Bab el-Mandeb Strait and the Red Sea to say we can do this if we want to. All right, the Houthis, who have been using Iranian equipment, which they were trained by Iranian advisors on how to do it. There's probably Iranian military on the ground in Yemen, and Iranian ships in the Red Sea have been providing the targeting data. They have gotten much better at hitting boats. All right, now there's this little stretch of water, the Strait of Hormuz, right between Oman and Iran, where 20% of the world's oil flows. And if the Israelis hit the Iranian energy infrastructure, well, the only reason the Iranians would not close the Strait of Hormuz as part of this conflict is they can no longer export their own oil. Well, if the Israelis blow up Iran's oil program, then they have just removed any economic deterrent from closing the Strait of Hormuz. So this is why I think the oil markets are finally starting to move here. We saw what happened in the Red Sea. The Iranians, if they do the exact same thing they did in the Bab el-Mandeb, if they do it in the Strait of Hormuz, you can bet oil prices will go sharply higher. So at this point, we're still like 2 or 3 moves ahead if we're playing chess, right? We're talking third, fourth order effects here, but the Israelis are probably going to counterattack today. What do they hit? And then what do the Iranians do? There is a path here to a major supply disruption in the Strait of Hormuz, and that is why I think oil prices are moving now when they have largely ignored all of this violence so far. Also going on this morning, Nike earnings came out yesterday. They were pretty bad. Nike's net income down 28%. But more importantly, they withdrew their guidance for the full year, and they also delayed their investor day. It seems like Nike is just clearing a path, like start over, do over. We got a new CEO coming in. He's going to right the ship. And in the meantime, we're just going to like forget everything we told you for the last year. Nike investors are not liking that. That stock is down pretty big. Now, Nike, that's like a major apparel maker, a pretty good sign for the health of the consumer. What kind of a landing would you say that was that Nike made yesterday? Any of you soft landing guys want to weigh in on that? Is it still the best economy ever? Because Nike is suggesting things kind of suck out there. Well, I just throw them out there. Also, we got news from Humana today. Pay attention to this one. More happening in healthcare here. Humana stock is getting crushed right now because apparently one of their Medicare Advantage programs just got downgraded by the Center for Medicare and Medicaid, and it's going to affect their bonus payments in a big way. A major portion of Humana's customers are now enrolled in 3.5-star Medicare programs versus a year ago, they would have been in 4.5-star programs. And by the way, I'm just like reading up on all this stuff just this morning. So this is like, my crash course on Medicare Advantage plans this morning. But there's going to be a big hit to Humana's bonus payments from the Medicare Center. That is what's driving that hit to the stock this morning. Of course, the company is like, we think they made an error in the calculations doing the math. And I guess they're going to appeal this downgrade of their plan by the Center for Medicare and Medicaid. I don't really know how a lot of this stuff works, guys. All I know is a big share of Humana's earnings is now up in the air, and the stock is getting clobbered, down almost 20% on that news. By the way, guys, there has been a lot of press, kind of quiet. It hasn't gotten as much attention as it deserves about Medicare Advantage plans in the U.S. There has been a lot of theft, a lot of grift, a lot of fraud. And now Humana is getting downgraded here. It has to do with the quality of the services. Humana's like, oh, we beg to differ. We want to recount. We want to appeal. Pay attention to what's going on in Medicare. All right. Something stinks in Medicare Advantage right now. Let's just put it that way. There's an odor wafting from the general direction of Medicare. And all the companies that participate in Medicare, they're doing really well. I don't know that the customers and the clients really feel that way, kind of like the whole healthcare system as a whole. Funny how that works. More from Japan this morning. Japan's new prime minister, Shigeru Ishiba, again is waxing dovish today, saying that they are not ready for further rate hikes. He had his first meeting with Kazuo Ueda, the head of the Bank of Japan, and they're all saying, guys, the Japanese economy is not ready for any more rate hikes. Don't worry. Feel free to pile on your yen carry trades. We won't be raising rates anymore. It's almost like the global central banks are coordinating their moves just to maintain asset prices. So we've got more dovish talk from a purported hawk over in Japan. And keep an eye on SOFR, secured overnight financing rate. All right, that is basically your overnight borrowing costs in between for banks lending to each other. Something has been going on in SOFR for the last 2 days. Now, this is kind of an obscure data point. 2 days ago, the secured overnight financing rate saw its biggest single-day spike since March of 2020, which, by the way, March of 2020, remember the whole vid thing? Yeah, kind of a shitty time, right? Now, if you take away Fed moves, if you take away changes to the Fed overnight rate, that obviously causes step changes in SOFR. If you take those away, 2 days ago, saw the biggest move since March of 2020 in SOFR, a sudden surge in overnight borrowing costs. All right, now it was 12 basis points. That's the biggest move in a few years. Now, 2 days ago, that was the end of the quarter. That was the end of the fiscal year, the end of the month, right? So we saw the spike in reverse repo. You usually see a lot of transactions. All the companies try to window dress their quarterlies and make everything look good. And funds and banks try to reduce their holdings of certain things and increase others to try to make their end of month numbers look really good and end of quarter look really good. So usually you see a little bit of a hiccup at the end of the month. So it's to be expected. But here's the thing. Last night, it went up again. SOFR went up another 9 basis points last night. Another big move in overnight borrowing costs. Now, we should not have seen that because last night, October 1st, it was not the end of the quarter. All right. We should have seen SOFR come right back down yesterday or last night, and it didn't. Now, my friend Just Dario on X has done a lot of writing in the last couple of days about somebody in China is blowing up. Somebody got caught massively short Chinese equities, and China is not the United States. When some big firm gets in trouble, China doesn't shut down the market or call up Vlad over at Robinhood and say, have conveniently timed technical difficulties so this firm doesn't blow up. That kind of crap apparently doesn't happen as often as it does here in the States. And so if this is really what's going on, and this is Just Dario is reporting based on rumors he's hearing on trading floors, if somebody is getting margin called and somebody's blowing up, then somebody is out there desperate for a large amount of cash because Chinese stocks have been going up in a straight line. And last night, the Hong Kong Stock Exchange reopened. They're still closed in China for the holiday, but last night there was a big surge in Hong Kong stocks again. I'm wondering, is somebody big blowing up because of China? And that's why we're seeing this surge in borrowing costs. Again, it's not set in stone. We don't have any names. We've just got rumors, but there's a lot of things happening in these overnight rates that you got to keep an eye on. I'll show you those numbers in the charts. And last but not least, guys, we got some jobs data in the last 2 days. It was mixed. JOLTS came out looking pretty good. Job quits looked pretty bad. And then this morning we got ADP payrolls that looked pretty good. It's all leading up to the jobs report on Friday, just 2 days away. That jobs report is going to be a market-moving event in one way or another. So we'll take a look at that data and see if we can get any hints about what's going on. Longest monologue in history. Why don't we shrink my big melon of a head and let's get through markets, guys. We got a lot to cover this morning. There's a lot happening. S&P 500 down 11 points or 0.2% this morning. The Dow, meanwhile, up 4 points, basically unchanged here. The Dow is flat. And the NASDAQ is in the red by 27 points or 0.14%. So not a whole lot of movement in stocks with a bias slightly to the downside. We've got the dollar is stronger once again this morning, up another 27 basis points at 101.47. That is 2 consecutive days of a stronger dollar. Now, let's talk about why the dollar is getting stronger. Looking at Japan. Japan's PM Ishiba says Japan is not ready for a rate hike after meeting the BOJ governor. This guy is supposed to be a hawk. The BOJ governor is supposed to be a hawk, and they're both acting like doves once again. Japanese Prime Minister Shigeru Ishiba said that the country is not in an environment for an additional rate hike in an apparent effort to shake off his reputation as a monetary hawk after a meeting with Bank of Japan Governor Kazuo Ueda on Wednesday. I do not believe that we are in an environment that would require us to raise interest rates further, Ishiba told reporters Wednesday night, adding that he was not in a position to instruct the central bank on monetary policy. So ever since he got the election, ever since he got the nod, Shigeru Ishiba has been trying very difficult to shake his reputation as a hawk. Now, look here, this big red candle in the USD JPY chart, that was Friday when he got elected. The market freaked out saying, oh my God, a hawk in Japan, the carry trade unwindeth, everything's going to be a mess, dogs and cats living together. Now, Ishiba has done everything he can to undo that, to basically come across as more of a dove. And the market is listening because ever since then, we have seen several green candles on the USD JPY chart. And remember, green candles, this chart moving higher. That is the yen weakening versus the US dollar. Moving lower is the yen strengthening. So here we are right now. We're actually higher than we were before or right around the point when Ishiba won the nomination. So the yen continuing to weaken here. We're at 145. We were as low as, about 141 just a few days ago. So that's putting some upward pressure on the dollar this morning. Looking over at the bond market here, we got yields are higher on the long end of the curve. Once again, the 30-year Treasury, 4.145. The 10-year, 3.809. The 2 is at 3.654. Oh, I forgot to say how many points. Basically, the 30 and the 10 are up 6 points. The 2 is up 3 points. The 1 month at 4.81. That's down a few points this morning. But look at that 4.8 handle on the 1 month. That was down in the 4.6s just a few days ago. Now, let's talk a little bit about the bond market, guys. Something to keep an eye on. Somebody out there is desperate for cash. We were talking about this in the open. Key U.S. short-term rate surges amid month-end turbulence. Now, this was yesterday. All right, this is important. This was yesterday, and this was somewhat expected. And I think this is probably why this didn't make news yesterday, why nobody was talking about it, because being the end of the quarter, the end of the fiscal year, everybody was kind of expecting it. All right, a key U.S. overnight funding interest rate jumped on Monday in a sign of tighter liquidity in money markets at the end of the month and the third quarter. The secured overnight financing rate, or SOFR, a measure of the cost of borrowing cash overnight collateralized by U.S. Treasuries, rose to 4.96% on Monday. That's up from 4.84 at the end of last week. A 12 basis point rise, according to the Federal Reserve Bank of New York on Tuesday, excluding moves that occurred when the Fed changed policy rate. Monday's SOFR increase was the biggest one-day change since March of 2020. Remember, liquidity was super tight in March of 2020. The rate rose 6 basis points above the interest on reserve balances that the Fed pays to banks, a sign of funding pressure. All right, so SOFR, secured overnight financing rate, that's the cost that the banks pay to lend to each other overnight. IORB, or interest on reserves, I don't remember what the B is, but IORB is basically the interest that banks get paid for parking their reserves at the Fed. So banks right now are paying more money to get their hands on more cash than they're getting paid to park that cash at the Fed. That means somebody out there needs cash. Somebody is running out of liquidity. Right? It's not an emergency. All right. It's not yet an emergency. And this was somewhat expected. But here's the thing. This is SOFRrate.com. It went up again last night. It's not September anymore. The month and the quarter, it's now over. So why is it rising again? SOFR now 5.05%. It's up another 9 basis points this morning. So whatever was going on 2 nights ago on Monday night, it's still happening, and it shouldn't be if this was just standard quarter-end stuff. It should be over by now. SOFR, though, it's still rising. All right, look, like we were talking yesterday about the surge in reverse repo. Well, reverse repo is coming back down, right? Reverse repo dropped to $375 billion from $465 billion. That's expected because it's no longer the end of the quarter. Reverse repo is coming back down, but SOFR is still going up. I don't know why that's happening. All right, so maybe this is just Dario's scenario where he's describing somebody in China was caught flat-footed, majorly short Chinese equities, and now they're desperate for cash because they're getting margin called. And look, the Chinese stock market is still closed, but take a look at Hang Seng. This is the Hong Kong index. Hong Kong was open yesterday. They're not closed for that Chinese holiday anymore. And look, up another 6.2% for the Hang Seng yesterday. Stocks in China and Hong Kong are still ripping higher on that fire hose of stimulus, and whoever was short those stocks is getting wiped out right now. The margin man cometh. Somebody is desperate for liquidity. I don't know if the China stock story is related to the surge in SOFR or not, but it's worth keeping an eye on, guys. All right, let's talk about commodities now. We've got gold is down about $7 for spot gold here, 2,656. Spot silver is at 31.85. That's actually up 41 cents this morning, or 1.3% higher. So we got gold and silver moving in opposite directions. Copper's higher by about 1%. Platinum is up about 1.9%. Palladium 2.2% higher. And crude oil up sharply again this morning, 72.22 for WTI futures in November, up another $2.39 or 3.4% higher. Israel vows retaliation for massive Iranian missile attack. This is what's driving that oil talk this morning. Iran made a big mistake and will pay, says Netanyahu. That is stronger language than he used in April when the Iranians launched their widely telegraphed missile attack. Benjamin Netanyahu vowed to retaliate against Iran after it fired about 200 ballistic missiles at Israel, a severe escalation of hostilities between the adversaries that world powers fear could spiral into a Middle East-wide war. The barrage on Tuesday evening came hours after the U.S. warned an Iranian assault was imminent. The Israeli Defense Forces said most of the missiles were intercepted, and reports indicated only one person who was in the West Bank was killed. Again, guys, the Western media reporting that it was largely unsuccessful. Most of the missiles were intercepted. If you go on X and you look at the videos, there was a lot of missiles hitting the ground. Now, what they hit, I don't know. They're all shown in the distance, but most of the missiles appeared to be hitting their targets yesterday, which means, hey, the Iron Dome, those interceptors, they're expensive and they're hard to make, and you can only get so many of them. These saturation attacks over time are wearing down the Israelis' air defenses, and a lot of that stuff got through yesterday. So now the question is, what does Israel do? In April, Israel hit back at Iran with a limited strike on an air base that caused little damage. That was largely considered to be a face-saving operation. This time, though, there's plenty of pressure within Israel for Netanyahu to respond more forcefully. Israel's response could come within days, and potential targets include the OPEC members' oil infrastructure, military bases, and in a potentially most extreme scenario, nuclear facilities. So it's what does Israel do now? That is the big question, guys. They're going to retaliate somehow. Is it going to be another face-saving limited strike, or are they going to attack energy or nuclear infrastructure? And the question is then, what does Iran do in response to that response, which was a response to the response to the response? Everybody's responding. Keep an eye on this little stretch of water, guys. The Strait of Hormuz, this narrow passage of water, 20% of the world's oil every day flows through this strait. And the Iranians have had a year of practice in Yemen, shooting at ships trying to cross through bottlenecks. And they've gotten very good at it. And though the United States has the U.S. Navy, our sailors have done an admirable job intercepting as many of those drones and missiles as possible. It's a whack-a-mole approach, and nobody is perfect. So the Iranians have still been able to sink ships and hit tankers and widely disrupt navigation there. And so if that plays out in the Strait of Hormuz, you better believe we are looking at sharply higher oil prices. And that is why the price of oil is reacting right now. It's at $72.10, still at the lower end of where it's been for the last couple of months. But you will notice, guys, a marked move in oil, a significant move in oil over these last 2 days. The oil market is telling us this time is different. All right. The oil market is telling us this is not April all over again. This isn't just another, let's coordinate our face-saving responses in the media and we can all bluster and saber rattle and then go back to hating each other quietly. It looks like this is worse. All right. So keep an eye on oil. Oil is telling us the Strait of Hormuz could potentially be in play here. Also going on in commodities, we've got Bitcoin higher this morning, but just marginally up $150 from a day ago. Still down sharply over the last couple of days. Bitcoin on Coinbase is trading at $60,939. It's been a rough couple of days for Bitcoin. It's also been a rough couple of days for tech stocks. The two seem to be trading in tandem. And now let's talk a little bit about Nike, who is getting clobbered here. Nike tries to rip off the Band-Aid for investors, and its stock price is feeling the sting. We have yet to turn the corner, their CFO said on Nike's conference call. By the way, he was the only one who took questions on Nike's conference call. Nike has withdrawn their full-year outlook and postponed their investor day. So they're kind of squeezing the cheeks over at Nike here, and investors don't like what they're seeing. Shares of Nike fell after hours on Tuesday after the sneaker maker tempered its sales expectations and said it would only offer shorter-term forecasts in the months ahead in an effort to give its new chief executive space to carve a way forward after months of slumping demand. The effort to manage investors' expectations came as Nike prepares to bring aboard Elliott Hill, a roughly 3-decade veteran of the company who retired in 2020, as its new CEO on October 14th. John Donahoe, Nike's current CEO, will retire a day prior after more than 4 years in the job. During Nike's earnings call on Tuesday, CFO Matthew Friend, the only executive taking questions during the event, said the company was withdrawing its full-year outlook and said it would only provide quarterly financial forecasts during the rest of its fiscal year set to run through May. And guys, you don't withdraw your full year outlook because you're expecting to beat that outlook, all right? You withdraw that outlook because you're not going to get anywhere near it. A CEO change, an annual outlook getting withdrawn, delaying investor day. These are major red flags at Nike. The company is also postponing its investors day, a move some analysts expected. For its fiscal first quarter, Nike reported net income of $1.05 billion or 70 cents a share, down from $1.45 billion or 94 cents a share in the same quarter last year. That is a 28% decline in net income for Nike, and the stock is feeling it, down 6.5% this morning, trading at 83.33, down $5.80. Another one getting clobbered this morning, Humana slumps 23%. As data shows membership in high-rating Medicare plans declined. Now, this is a little deceptive of a headline. The membership in high-rating plans has declined, yes, but that's because those high-rated plans are no longer higher rated. The membership appears to still be the same. It's just now they're in 3-star plans that used to be 4-star plans. And if you get your money because of Medicare Advantage, well, that is a big hit to your earnings. Shares in insurer Humana slipped in pre-market U.S. trading on Wednesday after data showed that the proportion of its membership enrolled in 4-star Medicare plans and above for next year fell sharply. Humana is a major seller of government-backed Medicare Advantage plans, which are designed for adults 65 and older. Preliminary figures from the Medicare Advantage Star Ratings, a measure of the performance of health and prescription drug plans carried out by the Centers for Medicare and Medicaid Services, found that just 25% of Humana's members had signed up for plans that had ratings of 4 stars or above in 2025. That's down from 94% in the prior year. Much of this decrease was due to the rating of Humana's H5216 contract being lowered to 3.5 stars from 4.5 stars. The company said in a regulatory filing on Wednesday, the plan contains roughly 45% of Humana's Medicare Advantage customers, including more than 90% of its employer group waiver plan members. The decline in Star's performance for 2025 will impact Humana's quality bonus payments in 2026, the firm flagged. The Centers for Medicare and Medicaid typically award a quality bonus to health plans that achieve 4 stars or higher, and now that they are no longer a 4-star plan, they won't be getting that bonus, and so Humana's earnings are going to take a hit here. Now, the company is saying we think that the Center for Medicare and Medicaid made a mistake. We think their math is wrong. We plan to appeal, yada, yada. But right now, stockholders don't care. Look at this one, down 21.2% pre-market, trading at $220. That's off by almost $60 a share this morning. Humana stock has been getting crushed this year. This one certainly is not going to help. Also, let's talk about labor data, because the next big market-moving event, besides World War III, of course, that would be the jobs number on Friday. And we got some of those lesser labor data numbers this week that usually gives us a little hint as to what the jobs numbers might be on Friday. And we got, let's start with JOLTS, shall we? Let me get it, my windows in the right order. Oh, did I close my JOLTS window? I sure did. Hold on a second, guys. I don't have my JOLTS window open. I am remiss this morning. Where is my job openings and labor turnover survey? There we go. All right. United States job openings rose by 329,000 to 8.04 million in August from an upwardly revised 7.711 million in July. That's above market expectations for just 7.655 million. Guys, this was a huge beat for JOLTS. The number of job openings in the country surged higher, plus an upward revision to last month. Now, last month's JOLTS number was a huge disappointment, and it gave us a good clue. Hey, this jobs number is going to suck on Friday. And of course, last month's job number really sucked. Well, this month, JOLTS took a big step back in the upward direction, now back over 8 million. All right. Now, I've done a lot of commentary about how the JOLTS indicator as a whole, it kind of stinks now because it doesn't account for ghost openings. And we know a lot of these job openings out there are just fake, that nobody's getting hired, even though the postings are still out there. We know there's multiple job postings in several cities for remote job positions, right? It's one job, but there's 10 postings. So we know a lot of that is going on, but still a pretty big month over month change here from 7.71 to 8.04. So more openings. This is suggesting maybe we get a pretty good labor number this week. But then we got the job quits number, the number of people voluntarily leaving their job, and that says not so much. The number of job quits in the U.S. fell to 3.084 million in August from the downwardly revised 3.243 million in the prior month. That is the lowest since August of 2020. So the number of people quitting their job is down sharply, the lowest since the vid. And, well, remember, guys, when people are quitting their jobs in lower numbers, that means they no longer think they can get a new job to replace it as easily, or they don't think they're going to get a big raise by changing job. Either way, people are staying put. Fewer people are quitting. And this number's down sharply. So this kind of takes some of the luster away from the JOLTS number, right? More openings, but fewer quits. So which one do you believe? It's really hard to tell. Now, yesterday I was leaning towards the quits number because when you see fewer people changing jobs, that's usually a pretty good indicator that the labor market is not as tight as they've been saying, that it's more of a buyer's market when it comes to labor. But then this morning, we got the ADP private payrolls number. Private businesses in the U.S. added 143,000 workers to their payrolls in September. That is significantly more than the 120,000 that was expected. It's the most in 3 months, and it's up from just 99,000 in the prior month of August. So ADP private payrolls is saying a big surge in hiring here. So what do you make of this data, guys? Let me know in the comments. You've got JOLTS and ADP are both bullish, showing labor market has a little bit of signs of life. You've got that quits data, though, that says not so much. People are still not changing jobs because they don't think there's any money in it. That's suggesting a looser labor market. But right now, I would say there is nothing definitive from these data points that tells me one way or another the labor market, this jobs report on Friday, it's probably going to be great or it's probably going to be terrible. Just based on these 3 data points alone, quits, JOLTS, and ADP, I'd say we're probably looking at a better jobs report than last month. But then again, we've had a lot of things like these big labor disputes at Boeing and at the dock, the dock workers going on, all the problems in the automotive space, a lot of layoffs in the auto space. So it's really hard to tell what this jobs number is going to be. We won't know until Friday morning. But of course, we will be out in full force with coverage just as soon as that number hits the tape on Friday morning. I told you there was a lot going on this morning, guys. Look, World War III, potential problems in SOFR in the overnight rate, Nike getting crushed, Humana getting crushed. There's a lot going on in the world right now. And the narrative in the press of, it's the best economy ever, everything's so awesome, good. It discounts all of these warning signs. It discounts all of these signs of problems in the labor market, all these signs of problems in the auto industry. We're trying to fix that here, guys. We're not just putting lipstick on that pig. We try to bring you the news as it happens. And there is just a lot going on this morning. And the last thing I want to talk about, we had the vice presidential debate last night. Let me just say it was a little refreshing. And I use that word loosely, but I mentioned this on Twitter last night. J.D. Vance and Tim Walz are far less ridiculous people than their running mates. All right. I am not a huge fan of either guy, Vance or Walz. All right. I'm not going to sit there and rah-rah or cheerlead for either one of them, but they were nice to each other. They weren't cackling buffoons. They weren't egomaniacal imbeciles. They were like normal, relatable people last night. It was nice. All right. It was refreshing. It kind of makes me wonder, can we ditch the other guys and just make that the race? Is that an option? It's probably not an option. I get it. But look, we just got rid of Joe and threw Kamala on the ticket arbitrarily. So primaries don't matter. Maybe we can do this. It's not too late. All right. That being said, I did watch the debate. CBS News embarrassed themselves. They said they weren't going to try to fact check, i.e. intervene on behalf of the Democratic candidate. And they did that again. J.D. Vance did an excellent job of putting them in their place when they did that. That being said, Vance kind of tripped up at the end with a question about who won the 2020 race. I think Vance probably took some heat from that. I think Walz embarrassed himself with his deer in headlights look when they asked him, hey, why did you lie about being in Tiananmen Square? That's kind of a big deal. Taking a step back, I would say if I had to pick a winner, I think Vance probably outperformed Walz. Walz stuttered a little bit and he had trouble finding his footing early on. And a lot of people just watch the first 10 minutes and then switch off. So if you made your opinion based on that, I think Vance came out ahead. That being said, VP debate, low viewership, probably not enough to really move the needle that much one way or another, but it's a tight race. So who knows? And that's my interpretation. But that being said, I would just say that the quality of the individuals, or at least their disposition, was a nice change of pace. Maybe a little bit more of that from you folks in politics. And I just want to say thank you very much to Mr. Teabagger. He says, I'm putting all my money in Melon futures. All right, man. You're going to YOLO in the Melon coin or Melon token? Sure. Why not? Appreciate the super chat and the support of the channel, Mr. BTB. And thank you, everybody, for having your coffee with the Melon Heads this morning. I appreciate that very much. Also, thank you to my Patreon supporters and magnanimous Melon Heads on YouTube. You guys are awesome. Thank you for everything you do for the channel. Looking forward to talking to you guys at 3 p.m. Eastern time today for our weekly get-together on Zoom. Links down below to all that good stuff, should you feel so inclined. Hi, Mom. Hi, Dad. Love you guys. Everybody, till next time, live small and dream big.